231,000 initial jobless claims filed last week. That is up from the initially reported 217. We'll get the revision in just a moment to last week's numbers, but 218. So not much change. So it is a significant increase of about 13,000 or so. The continuing claims number is 1,865,000, up from 1,833. I thought maybe we would see some of the continuing claims go down as the auto workers went back to their plants, but that doesn't seem to be the case. So if you are looking for a story about the economy and the labor market getting a little softer, you might find it in this week's jobless claims numbers. The import price index comes in higher, much higher than anticipated, up 0.6%. Ex-petroleum, though, down 0.2. So it's kind of hard to separate that out because what we've seen is gas prices coming down, oil prices coming down. So we'll have to look further into that. On a year-over-year basis, import prices are down 2%, which is more than had been anticipated and more than the 1.7% last week. And then we've got the Philadelphia Fed comes in. The Philadelphia Fed headline number is negative 5.9. That is up a little bit from negative 9. And prices paid comes in at 14.8 after 23.1. So a big drop in prices paid for the Philadelphia area.
So, Mike, just to give us a little bit more color, do we have a sense of how broad-based some of these claims are, about how funky they are, or if this really is highlighting the weakness that seems to be implied in markets, albeit on the margins, not cratering, but just maybe normalizing?
Maybe normalizing. Yeah, we don't have any idea that there is anything wrong with these numbers, so it does look like at this point that we're basically just seeing a few more people who are not getting jobs, and those who are not getting jobs are taking longer to find new ones. It's not a huge sign of an apocalypse in the labor market, but it does suggest that maybe the normalization process continues, which is what the Fed wants to see.
10 seconds, another wall of data today. What matters next across November 16th data?
Well, we've still got industrial production coming out. The problem with that is it's expected to decline because of the UAW strike. So you got to throw that out, unfortunately. A lot of Fed speak today, but really not on monetary policy. So I wouldn't expect much to change the market outlook based on what I do.